Good morning and welcome to the ADS Securities Markets Update. We'll start today, of course, with a look at the ECB decision. First of all, the ECB decided to keep the current rates unchanged, while there was some speculation back then that they might cut the deposit rate even further. However, and finally, the ECB decided to launch a large-scale of QE, a program to buy government bonds. The ECB will buy around 60 billion euros monthly for 2 years, which means that the program will be around 1.14 trillion euros in total. And this is also higher than the market estimates and also higher than the ECB leaks on Wednesday, which was around 15 billion euros on a monthly basis, which might continue toward only 12 months or may exceed 24 months. However, the program and these measures might not be enough to spark inflation in the next few months, as the ECB thinks. But of course, it was well enough to wait on the euro, which fell toward also as low as 1.1315, which is a new 11 years low this morning. And here I would like to point out that our extreme negative view on the euro began on September 4th of last year, when the euro was trading, or when the euro broke through 1.30. And in the meantime, 1.12 and 1.1180s could be the next stop for the euro, maybe, or might see it in the next few weeks. Going forward to fundamentals today during the Asian session, firstly, there were only two economic releases from Japan and China, which had a notable impact on the markets and especially on the Aussie dollar. Beginning with China, the HSBC Manufacturing PMI came in at 49.8 in January, up from 49.6, while the estimates were to rise toward 49.5. However, this is the second monthly reading well below the 50-key level, and therefore the Aussie took the hit again during the session following the release, reaching as low as 79.70 so far. In Japan, the flash manufacturing PMI also came in slightly higher than expected, rising toward 52.1 in January, comparing to 52 in December of last year. And this is also the second monthly increase in a row. As for the European session ahead, we will be waiting for a collection of economic releases across the session. Today, eyes will be on the manufacturing and the services PMI from France, Germany, Spain, Italy, and the Eurozone as a whole, which likely to have also another notable impact on the euro, and most of these figures are expected to come in weaker than the previous month, which basically might push the euro even lower during today. In the UK, the retail sales is expected to decline again by minus 0.6% in December, after a rise of 1.6% in November, which would be also the first monthly decline in 2 months. Going forward to the US session today, a collection of economic releases or economic figures will be released again from Canada and the US, which is likely to do another major impact, or to have another major impact on the markets before or ahead of the weekend. Beginning with Canada, the retail sales is expected to show some recovery last month and may rise by 0.1% in December, comparing to no growth in November, while the core retail sales may rise by 0.5%, comparing to a rise of 0.2% during the same period, December and November, which also would be the second monthly increase in a row. The Canadian inflation figures also will be released today and during the same session, which may lead also to another wave of selling for the Canadian dollar across the board if the CPI also disappoints further. So the monthly CPI is expected today to decline by 0.5% for the month of December, which would be also the second monthly decline in a row and the biggest decline since December of 2012. The core CPI is expected to decline further by 0.3%, comparing to 0.2% of a decline also during the same period. And it's also the second monthly decline in a row and the biggest decline since December of 2013. Finally, in the US, the flash manufacturing PMI is expected to rise again toward 54.1 in January, up from 53.9 in December, which would be also the first monthly increase after 4 consecutive monthly declines. Finally, the existing home sales is expected to rebound further toward 5.08 million in December, up from 4.93 million in November, which would be also the highest reading in almost 2 months. This is it for today, and this is it for the week. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. Thank you for watching, and have a good weekend.